Welcome back, everybody. You guys are tuned into the official YouTube channel for the CoinCasso Cryptocurrency Exchange, the official crypto partner of Paris Saint-Germain, one of the world's greatest football clubs. In today's episode, I want to teach you guys safe trading, having a proper risk management program that's going to allow you to stay safe trading your capital while still gaining over the long term. I also want to cover what we discussed in my previous video about trading the breakouts and why it's a bad idea. So if you have 5 minutes of free time, I really suggest you watch the rest of this video. Good morning, everybody. It is Tuesday, September 29th. Thank you so much for joining me every single day. The amount of positive responses that I get from you guys in the comments saying that this is one of the best crypto channels, that means a lot to me. And if you're new here and you like what you see in this video, consider subscribing down below and tick the notification bell to get notified every time we upload a new one. Okay, so yesterday's video, I talked about the price of Bitcoin actually hitting a Fibonacci level and possibly coming back up. If you heard my message and you actually heard it and you didn't jump the gun and you didn't get in on Bitcoin thinking that it's going to go long now, you are a very smart person. In yesterday's video, I talked about not trading the breakout. It's extremely dangerous and it's a big trap for a lot of people. This is what I was talking about yesterday. This is the daily candlestick chart of the last few days of Bitcoin. We had a huge come up, retest down, and then come up. Throughout the day, this candlestick was actually green. So people anticipated this. Once the price yesterday broke above this huge red candlestick, a lot of people started buying in, thinking that it was going to rally, trying to get that breakout trade. So what happened? The price went up just a little bit to $10,952 and then closed everybody out, dropping down to $10,600. This is why I said you have to wait and not trade the breakout. You have to watch the breakout, come back for the retest, and then catch the second leg. I will be beating this into your head nonstop. So hopefully you guys heard yesterday's video, you didn't jump into Bitcoin too early, and you waited, just like I said, so you didn't get this loss. Now let's get on to trading. I suggest everybody that's in cryptocurrency have 80%, 90% of their portfolio as a long hold. You find a good price that you're comfortable with, you buy in, and you ride that sucker for 10 years. If you do want to trade, only trade with a small portion of your portfolio. And if you're leverage trading, be very, very careful unless you are an absolute professional. I do not recommend leverage trading on cryptocurrencies because if the price drops down dramatically, you don't have a stop loss, your losses are multiplied by your leverage. You're screwed. So, how to day trade cryptocurrencies? Like I've told you before, every single piece of price action is a Fibonacci retracement. Here I have the daily candlestick chart of Bitcoin showing this massive bull run and then a pullback to the key Fibonacci levels. So if you take this same concept and break it down into a smaller time frame, I will show you how to day trade cryptocurrencies. Just to keep the massive fluctuations out of it, not go too far in the past and not use the price action right now, I'm using this purple square from September 24th to September 27th, where we saw a nice consistent price movement in Bitcoin. Now, how do you make money off of this? This is the 15-minute chart. And what did I tell you about Fibonacci retracements? Every single movement down or up will retrace in a Fibonacci level. Let's take this first one, for example. You watch the entire thing tank down, so you go from the highest point to the lowest point, and it's either going to retrace at the 50 or the 618 level, and worst case scenario, the 786. So zooming this in, what are you looking for? You are sitting on the charts and you're watching for a huge draw down or a huge pull up. It works either direction. Once you see the price go up to the 50 level or the 618, you wait for it to start dropping. At the point where you know it's reversing, that's when you get in on your trade. Now, most people go for a 1-to-1 risk to reward ratio. If you win 50% of the time, you're break even. I like to do a 2-to-1. So how would you trade this? 618 levels in cryptocurrencies happen quite often, but if you want to play it safe, go for the 50 level. Wait for it to go up to the 61.8 and then come back down to the 50. So at this 50 level, you're expecting the price to continue going down. So zooming it in even closer, taking a look at this 50 level as your entry point. You're going to drop your trade right there on the 50 level. Now, don't expect that you're going to get these huge swings and hold the trade for a long time. This is day trading. This is catching the moves in the day. You can do this multiple times throughout the day, but if you're looking at a 15-minute chart, only place trades on a 15-minute trend. So the safest bet on any trade is to get in on the 50 level and then get out at the 23.6 level, which is why I have it marked in green. Now zooming it in even closer, this trade got extremely close to your stop loss. Your take profit level here is your 23.6. 2-to-1 risk to reward is going to put your stop loss right here. As you can see, we got extremely close right here, but eventually the price did come back down and hit your take profit. So depending on how much you want to risk, I'm going to keep a leverage account out of the equation and just say that you have $1,000. Per trade, you want to risk 1 to 2% to be safe. So of your $1,000 on this trade at 2%, you'd risk $20, right? So once you place this trade, you put your stop loss at that level. Now, if you're wondering about position size and stop losses and all of that, there are calculators on the internet where you do a position size calculator. You type in the amount of money you want to risk, your account size, and it'll give you the amount that you want to buy. So here for your trade, your risk at 2% of your account balance of $1,000 is only $20. You were risking $20 to make $40. This trade did not hit your stop loss and you made $40 within 30 minutes. Now, remember what I said about Fibonacci levels being on every single movement in the price. You see this big move up? Boom. Top to bottom, Fibonacci retracement at the 50 level, and it went to the 236. These two candlesticks down, went to the 50 level, and then to the 236. This big move down, went to the 50 level, and then to the 236. This big movement down, went to the 786, but on its way down, you get in at the 50 and you get out at the 236. This big movement up came down to the 50 level and then up to the 236. Eventually, after a while, you just see these things as patterns. Big movement down, up 50%. Big movement up, down 50%. Big movement down, up 50%. It happens all day, every day. You are not going to win 100% of the time. For example, on this one, the price went up, came down to the 50 level. I don't believe this one would have hit the 236 and then went the other way on you. This is a loss. But if you win like 80% of the time at a 2-to-1 risk to reward ratio, you're overall going to be ahead. This is why proper risk management is set into place. You do not put in a trade without a stop loss. Let's just find out for sure if this was a losing trade. Big movement up, went to the 50 level, and then did not hit the 236. So you get stopped out on this trade. This was a loser. But if you look at this one block, you're probably looking at about a 70% win rate just on this strategy. I know I promised a brief overview. This just gave you a taste of what you can do day trading on the 15-minute chart with cryptocurrencies. If you guys want more information like this, make sure you leave a comment in the comment section saying, yes, more please. But the things you have to remember, every price movement will retrace. Always, always, always use a stop loss and stick with your trading plan. Make every trade exactly the same every single time. Be systematic about it, take your losses like a man, and go on to the next trade. Then over the course of 3 months, you'll realize that your win rate is 70 to 80% at a 1 to 2 risk to reward ratio, and you will be in the green. I promise you that. Like I said, leave it in the comment section down below if you want to see more information like this. And if you leave a comment down below, you could win Fan of the Day. That brings us in today's Fan of the Day segment, winner of 10 USDT. Using a random comment generator, I will draw one comment from the previous video and search, and the winner of Fan of the Day is Darius. His comment was, "This channel is underrated, for real, for real." Darius, thank you so much for your comment, and congratulations on winning Fan of the Day. Make sure you sign up to the CoinCasso exchange and put your CoinCasso ID number in that comment thread, and I will send you 10 USDT today. If you want to win tomorrow's Fan of the Day, just leave any comment down below, whether it's an emoji, good, bad, just be nice, and you might be able to win tomorrow. If you guys got some value out of this video, make sure you leave a like and subscribe on your way out, and we will see you back here tomorrow.